All right, let's get right into it. What we just witnessed was, and I'm not exaggerating, one of the most violent head fakes the market has thrown all year. We went from full-blown AI panic, a legitimate is this the top moment, to an absolute payday all in less than 24 hours. You're going to want to buckle up for this one.
I mean, this was the question on everyone's mind just yesterday. The selling was relentless. It was across the board, and for a hot minute there, it really felt like the party was finally over. You could feel the fear in the air.
And this is what that fear looked like in black and white. A total sea of red. IBM absolutely crushed, down 13%, just because a startup threatened its old school COBOL business. Datadog, CrowdStrike, slammed by double digits on fears that AI would just make them obsolete. And listen, when the S&P 500 itself drops a full percent, you know it's a classic risk-off bloodbath.
But that was just the setup, see? The market action of the last 2 days played out like a movie script. You had the perfect storm of tension, a super dramatic reversal, and a resolution that nobody saw coming. This wasn't just random noise, it was a flat-out battle between two powerful stories.
On Monday, the whole narrative was AI dystopia. The market was absolutely terrified that these new AI tools would just destroy existing software companies, and on top of that, nobody knew what was going on with trade tariffs. The mood? Risk off. Sell everything, ask questions later. But then today, the story completely flipped. A monster chip deal and a flood of partnership news created this new narrative, AI euphoria. And the mood? Risk on. Buy the dip. It's just a perfect example of how fast fear can flip to greed.
So, the big question is, how did this actually happen? Let's dig into the specific stocks and sectors that were right at the heart of this incredible turnaround. The data, well, it tells the whole story.
Just look at the violence of this move. The software sector, we're looking at the IGV ETF here, it had been bleeding out for a month, down a staggering 22% because of those AI fears. Then, bam, a 2% snapback in just one day. That's not a recovery, folks. That's a bear trap snapping shut on anyone who was short. So on Monday, the story was clear. NVIDIA is the only game in town. The competition, dead. Meta's huge spending was only going to go to them, and then
This quote from 24/7 Wall Street just nails the moment perfectly. Just as all the doubters were counting them out for the last time, AMD stepped right into the ring and landed a massive counterpunch.
And this number shows you the scale of that punch. A $60 billion deal with Meta over the next 5 years. This wasn't just another order. This was a statement. It proved single-handedly that this is not a one-horse race. Meta is diversifying, the demand for AI chips is off the charts, and AMD is a real high-volume player. Seriously, this news alone was enough to reignite the entire hardware bull case.
Okay, so we've all seen the headlines. But the real edge, it comes from understanding the moves behind the moves. So let's get into the signals that the pros were watching, the stuff that doesn't always make it to the front page.
This was a classic head-scratcher for a lot of traders. Broadcom came out with what looked like fantastic news, and the stock just got hammered. So why? Let's break it down.
On the surface, everything looked amazing. They beat their numbers, they gave upbeat guidance, and they announced a massive $10 billion backlog for their AI switches. By all accounts, this stock should have taken off like a rocket. But here's the gotcha. Buried in the details was the real story. The profit margins on these new AI sales were actually lower than in their other business segments. This is a huge signal. It tells us the market is maturing. It's no longer just about, hey, how much AI revenue do you have? It's now, okay, but how profitable is that AI revenue? This is second-level thinking, and it's what separates the pros from the amateurs. But while the smart money was busy dissecting hardware margins, they were also watching a huge narrative flip happening in software, and it all revolved around one name, Anthropic. See, on Monday, the story was that AI was coming to eat software's lunch. But on Tuesday, Anthropic rolls out a whole bunch of high-profile partnerships with companies like Salesforce and DocuSign, and suddenly, the story isn't about replacement anymore, it's about enhancement. This AI kumbaya moment, as one analyst put it, showed the market a world where AI doesn't kill software, it makes it better. And that was the green light for the entire sector to bounce back hard.
Okay, so what are the real takeaways from all this chaos? How can you actually use this stuff to become a sharper trader? Let's break it down for every level of experience.
For beginners, the lesson is simple. Narratives drive everything.
Don't ever underestimate how quickly one headline can flip the market from extreme fear to extreme greed. For you intermediate traders, the signal was that narrative shift. The moment the story changed from AI being a threat to AI being a partner, that was your cue to start looking for longs in those beaten-down software names. And for our semi-experts, the key is that the game is changing. The market is now looking past the hype. It's demanding to see profitable growth and a solid, diversified supply chain. That's where the new edge is.
Now, this whiplash isn't the end of the story. It's really just a chapter. So let's look ahead and see what could trigger the next big move this week.
We've got a packed calendar coming up. President Trump's State of the Union could definitely bring more tariff headlines. Geopolitical risk is back on the table with the US-Iran talks, and of course, the main event, NVIDIA earnings on Wednesday. Any one of these could spark the next big wave of volatility.
So, here are two simple paths forward. If the State of the Union is heavy on trade war talk, expect the market to get nervous all over again. That's a risk-off scenario. But if we see more partnership news coming out around NVIDIA's earnings, that AI kumbaya narrative is going to get even stronger, likely pushing software stocks even higher.
And before we wrap, please remember this. The market just taught us a very powerful lesson in humility. The trend is your friend, but it is not your god. Stay sharp, stay flexible, and always, always respect the risk.
If you're serious about leveling up your trading and you want to be part of a community that catches these narrative shifts as they happen, this is your next step. Go subscribe to CIY Capital on YouTube and follow Ron Rose Trading on Instagram. That's where the real work gets done.
And of course, just a reminder, this is for educational purposes only and is not financial advice.